And we're live. So, John, really appreciate you tuning in today. I looked at my messages. I think this has been around a year in the making, this one.
Yeah, it's been a couple of back and forths trying to get two busy schedules coordinated. So I appreciate you and appreciate you asking me to do this. Thank you, D.
Sounds good. Well, I thought we'd start this off with something fun. Look, you've been in the M&A space for over 20 years now. So, what's been the most interesting experience that you've had in the space?
Yeah, it's hard to believe it's been 20 years. Time flies, I guess. But I think the most interesting experience for me was actually, I've had the role as an advisor, and then also had the role of kind of writing the checks myself and being the investor. And I think you have a different perspective when you're actually doing it on your own kind of bankroll and your own, doing it for your own investment. So I think that has been really interesting. You kind of have a different viewpoint of, when you're looking at diligence, of when you're actually looking at the investments and the merits behind it. Not to say that you don't put that level of care and diligence when you're doing it as an advisor. I just think that there's another level of detail that goes into it, again, when you're doing it on your own dime, and doing it for your own kind of personal investments.
Yeah, definitely. And someone like yourself, who you're a qualified corporate accountant too, right?
I am, yeah.
Yeah. So, what do
I
you
don't
think?
like to tell too many people that, though. Just not very good at it. So,
So, what do you think that you see differently to other business buyers having that background?
I think reading financial statements is super important, right? Like, although I joke that I'm not a very good accountant, I think it's taught me, just the ability to quickly look at a financial statement, and be able to discern if a business, is decent from just a financial perspective. So I definitely recommend people that are looking to do either business acquisitions or get into, business investing, even stock market investing, like really understanding the financial statements, and not only the income statement where a lot of people focus, but also the balance sheet is really important. And then post investment, in terms of just financial reporting. A lot of times when you buy a business, you're going to be using financing from a bank or some other sort of financial institution. So understanding how to report to the bank, and also what they're looking for, right? And the impact of your financial decisions on the actual financial statements and reporting of those financial statements to an institution, I think is very important. So, that's again, I joke about not, being a very good accountant. I think it served me very well in this kind of exercise of going out and buying businesses.
Yeah, definitely. And previously working for Deloitte, being in that sort of corporate environment, I understand you've taken businesses public too, which we'll come on to, but coming from a very corporate driven environment and then moving into a more entrepreneurial environment, which of course it still has corporate elements, what things have you taken from that corporate environment over to your own sort of journey as an entrepreneur, that you felt that there was elements of it that you thought, I need to take these with me to continue my journey in the correct manner?
Yeah, I mean, first of all, when you have the kind of name of a Deloitte behind you, it's easy to open doors, right? You can call anybody and say, "Hey, I work for Deloitte," and there's automatic kind of respect, and people recognize that, okay, this guy works at Deloitte, has some credentials behind him. So I think that allowed me to build a really deep network, locally and globally. So that is definitely important. That this doing deals is a relationship. Not, I don't want to call it a game, but a relationship exercise, right? Being able to who bankers are, know who other financial providers are, have a network of advisors that you can lean to when you have questions. So I was able to do that, again, because of my affiliation with Deloitte, and that definitely helped me. But I would recommend anybody to do that, right? Really understand the ancillary team that would go around, that can definitely help execute on this buying and selling businesses. So definitely one thing that I've taken with me is just the importance of a network, the importance of leaning on people, the experts that you need to help get these kind of transactions completed.
Yeah, I think that's one thing that it's not that it gets overlooked, but I think team and overall building the network so important in growing in any shape or form in business. So yeah, I think that that's something like I said, doesn't get fully overlooked, but I think some people try and absorb knowledge from other areas and they sort of potentially overlook the fact that look, the networking and some of the basics, building common ground and rapport with people, that can go a long way as well. Like if you don't know the answer yourself, if you build a network, then you can go and find the answer from that network. So definitely a good point.
Yeah, and just adding to that, just being able to pick up the phone. It doesn't have to be formal, but picking up the phone and saying, "Hey, like I have this issue, Jim or Sarah, can you help me out? What are your thoughts on it?" Right? Like, and being able to and reciprocating too when they call you and ask you for help, right? So it's more than just a professional network. It actually becomes friendship, with a lot of the people that you interact with and start to build these relationships with. So again, it's kind of like a pay it forward type thing, right? You're asking for advice, they're asking you for advice, and everybody just gets ahead.
Yeah, definitely a value exchange. So, what do you think personally is some of the biggest mistakes deal makers make? Yeah, from your perspective.
Um, well, there's lots of them, and I've made probably 90% of them, and the other 10% I just haven't encountered yet. So, you know, um, I think one of the biggest mistakes is just recognizing how hard this is to do, right? Like, people think, okay, I'll go and I'll find a business and I'll put an offer and it'll happen, right? And that kind of that pathway is a little bit more difficult than just that happening, right? Like you probably have to do it 10, 20, 30 times before you actually land on an opportunity. And then even when you land on a good opportunity, there's so many things that can go wrong. So I think just recognizing the difficulty of how hard this is to kind of execute as a strategy, and really sticking with it. Maybe people fall off because the first three or four transactions don't materialize, and they say, "Well, this just doesn't work." And then they just move on to a different type of strategy. But the difficulty of it, finding the opportunity, finding the capital, structuring a deal, and navigating through just the people element of it, it's hard. And if it was easy, everybody would be doing it. So I think just the stick to itiveness of people to get through it, I think is something that's maybe underestimated.
Yeah, I think there's a lot of resilience involved. It's hard to stay consistent and disciplined. It's quite a lonely game, right? Even with a team, as a lonely game, there's a lot of no's. What's the sort of things that you feel has helped you in regards to the mindset side of it, to keep that resilience going when you do get those no's?
Having I had a partner in
Mm,
doing kind of our acquisitions, and that was definitely helpful. I mean, he was very strong-willed, and as was I.
mm.
And we fed off each other. When there was down times, we would pick each other up. So I think having somebody that you can lean on is definitely helpful. Somebody that you trust, somebody that you think has a comparable and synergistic skill set to you. I think is something that's great to have. So that was definitely helpful in getting us through kind of our acquisitions, and then recognizing and filling the gaps on where maybe both of our skill sets didn't meet what was needed at the time. So we really went out and found other people that helped us kind of achieve these goals and that wanted to be on the bus, so to speak, in that the right seats to help us get to our destination.
Yeah, and talking about sort of meeting those people that do want to jump on the right seats. Social media has made the world a very small place now, right? And you can position yourself in a certain way on social media. People take people more serious if they take time on how they position themselves. So you feel social media has changed the M&A space somewhat in some way, shape, or form in regards to potential expectations or brokers sort of race to the bottom in certain valuations in certain sectors. Do you feel that social media has played a big part in the change of the landscape?
Definitely. I mean, social media has changed every aspect of the world, right? But in the M&A world, to your point, the world has gotten so much smaller, even more small in the last 2 years, right?
Mm,
Even from my own perspective, where I felt that M&A was a very kind of geographic game where, professionals should only kind of play and participate in their kind of area of the world. I still think there's some truth to that, but it definitely has expanded. And in my advisory practice, I mean, I've really kind of opened up and seen the ability to work with clients around the world, on helping them do acquisitions, sourcing acquisitions, building relationships with different financial partners in different regions of the world. So I think M&A has definitely done that, in terms of being able to build real connections where maybe before pre-pandemic, people felt like if it wasn't face to face, it wasn't real. But now I think, a lot of this virtual stuff helps us build and deepen connections. So it doesn't have to be, the physical face to face. It could be virtual. We could build some really deep connections that way. I think a couple of other things. I think people are now seeking kind of the world's best expertise. So, they're I'm in Edmonton, Canada, and I'm talking to you over in the UK, right? So being able to kind of demonstrate, hey, this guy in Edmonton, Canada has done some pretty cool things on acquisitions. He has some pretty good advice to share on his experience and his his journey on being able to grow a business through acquisition. So people are actually seeking the expertise from these experts around the world, regardless of where they reside. And then the last thing, I think there's just been a proliferation of knowledge, right? Where, especially in the lower middle market in private businesses, where it's been really kind of opaque, the knowledge that people have had around, okay, what multiples do I pay for businesses? How do I execute on this? One thing that I've been adamant about is just advisory fees, like how much do you actually pay an advisor to help on the buy side or the sell side? So that, social media has definitely been a proliferation of the knowledge, and created a lot of transparency in this space to help with some of those things that have been opaque, prior to, kind of just the ability to share this information more widely.
Yeah, I think like you mentioned a few good points there. I think the fact that Zoom, Teams, or Google Meet, whichever is your one of choice, I think that's definitely helped for deal makers, well, both buy side and sell side, in regards to saving out a lot of time. Of course, site visits are super important, but building that initial rapport with buyers or sellers, whichever side you're on, it does save a lot of time. And like you mentioned, location too, which is probably my next question on location, where, like you said, a lot of people used to think location mattered. It still does. But do you feel now, because the world of social media is sort of, because of social media has brought the world in and it feels like a smaller world now, do you feel people are now testing different markets, different geographical locations, as long as there's a good management team, good infrastructure there? Do you feel people are more willing to do some of these bolt-on acquisitions and location doesn't matter as much?
I do think so. Yeah. I mean, I'm helping a client right now do kind of a global search. So Europe, and all of the US for, their first acquisition. And, although they're willing to travel, and be in the location physically, pretty regularly, I think again, the ability to build kind of a rapport and the trust with the seller, if you are a buyer, is a little bit easier to do now because everybody's accustomed to these types of conversations virtually, right?
Mm.
So I do think it has kind of expanded the mindset of a lot of businesses to say, hey, like I don't need to be stuck in Western US or in the UK. I can really kind of expand my reach, and expand kind of my operational, kind of management style to do a lot of these things virtually. So, now I can start looking at acquisitions on a more global scale. So definitely, I do think that the mindset has changed. Again, this world has gotten smaller, our reach has gotten much longer, and people are definitely considering different avenues that they might not have considered before. Kind of again, the proliferation of more virtual conversations.
What do you think are the key factors when it comes to location? So if you are looking at businesses that, maybe in a different time zone, or even just a flight away, what's the key factors that you would need to look for as a buyer um, to even entertain one of those businesses in a different location?
Yeah, I mean, I read a great quote the other day and I think this is, I think this is applicable to all acquisitions, right? So, the three things that go into successful acquisition, and this is Steve Schwartzman, CEO of Blackstone, the biggest private equity firm on the planet. He said success in acquisitions or success in private equity investing comes down to three things: buying well, key, and I'm paraphrasing here, but a grade A management team, and then selling well, right?
Mm.
So I think the first place to start is buying well, right? So is it an acquisition that fits your strategy, right? And regardless of if that geography fits your strategy on where you want to expand to, buying well takes into account the valuation. Like that is a real consideration. Like how much am I paying? Am I not overpaying? And then deal structure and all of that. So, I think all of those considerations kind of come into play over and inclusive of geography when you're looking at an acquisition.
And when it comes to grade A management teams, what are the initial qualities that you look for to put someone in that grade A category?
Oh wow, that's a loaded question there. For me, it kind of comes down a little bit to instinctual, right?
Mm.
There's a lot of people that talk a good game, but then, kind of gets down to execution. And you're like, okay, well, this guy is a little bit more talk than action.
Mm.
So, at the onset, it's a little bit instinctual, but I do think it's, some of the qualities that I've seen, financial acumen is,
Mm.
important. I think a lot of times people look at kind of charisma, hey, is this a charismatic leader? Is he able to kind of rally the troops? But maybe if he's lacking on the financial side, it's kind of like, um, I guess, swept under the rug a little bit if he's, a super charismatic person. I said guy, but I mean guy or gal, right? Um, and um, but I do think financial acumen is really important when you're growing a business, right? Business is around, providing and growing a business profitably. It's not just growing a business at all costs, right? So I do think the financial acumen is really important. I think the charisma is important, being able to kind of rally the troops. I think having, kind of a vision that you can, communicate in a very succinct and easy way for people to understand and get behind is important. So I would say that those three are really important: financial acumen, charisma, and just kind of that strategic vision of where the business could go, and ability to rally the troops to execute. Not necessarily have to execute themselves, but be able to find the right people to put in place to kind of make that vision become a reality.
Okay, and for those that may be looking at a business currently that, um, maybe the owner doesn't play too much of a role in the day to day, but the management team doesn't really have somebody that can really step up. When it comes to recruitment, what sort of some of the things that you look at? Because when you start to recruit externally and put someone new into the mix, you want to obviously be mindful of the damaging culture, also integration. What are the type of things that you look for somebody if you do have to bring someone in from somewhere external?
Yeah, it's a good question. And when I remember I said there was like 90% of the things that could go wrong, I probably
Yeah.
been part of. And then that was, the many times we made that mistake in terms of bringing an external manager into the picture and it just not being the right person.
Mm.
And sometimes it's not about being the right person. It's about fitting, like really defining and understanding what is it that you need and what do you want, and then trying to fit a person, that right person in the right seat type of concept that I think it was Jim Collins that kind of um, you know famously discussed in his book. But that's a tough question. We made that mistake so many times that I don't know that I have the right answer for that. I do think it's really kind of having a definition of the role is super important. Really understanding what you want that person to accomplish in that role. And then we have found that when we were growing our business, it's people that fit the culture that's important. So maybe the person immediately doesn't have the right skill sets for the role, but is a really good fit on the culture side. I think that is more important than finding a person that has the right skills a lot of times, right? So if you can define the role, they understand that definition of the role and are willing to try to mold into it, or to kind of accomplish the objectives that you have for that role, and then having that person is a real good cultural fit. I think that's a good start for success. Now, if it works or it doesn't work, that's to be seen. But at least that's a really good starting place.
Yeah, definitely. It's one of those, I suppose, that it's very hard to know until they're actually in the business, right? So yeah, it's very hard. So for someone like yourself, you've taken a business public. First and foremost, what sort of hoops have you had to jump through? And I suppose we could be all day talking about all of them, but what are some of the standouts, some of the hoops you had to jump through while doing multiple acquisitions, but also building and scaling with that end goal in mind, if it was in mind? Yeah, can you speak a little bit on that?
Yeah, we kind of had that end goal as an alternative. So, we kind of when we were building our business, we were always looking at, kind of our next 12 months. Where is it that we want it to be from kind of a financial perspective? How did that translate to just a net worth perspective for ourselves and our stakeholders? And then from that, okay, how do we monetize that potentially, or how do we access the capital that we need to do the next 12 months after that, right? So we kind of always had a 24-month kind of vision in front of us.
Mm.
And we got to a point where the private markets, where we were raising capital, just became a little bit more difficult to raise capital to kind of continue to execute the acquisitions. So we felt that the public markets were, kind of the next avenue that we needed to go to kind of be able to access that, tranche of capital that we were looking for to continue our growth plan.
Mm.
Some of the hoops, I think, there's just a lot of regulatory stuff that needs to go through. So we had to kind of back up. We weren't getting audited financial statements, so we had to go through and kind of start to prepare getting audited financial statements. Definitely had to kind of restructure our corporate offering and our corporate kind of organizational chart a little bit. So there was some administrative stuff on the restructuring of kind of just our overall corporate organization. And then, just a lot of legal paperwork, right? Who are the institutions that are coming in and providing the funding and the capital? So there was capital raised behind it. And just a lot of the other regulatory stuff with we're going public on the Toronto Stock Exchange. So discussing with the regulators there in terms of what was necessary for us to just execute that kind of next step in our business evolution.
Yeah. And now these days, you provide advice for, middle market M&A. Is that for both buy side and sell side?
Both buy side and sell side. That's right. Yeah. I'm passionate on the buy side,
Yeah.
just because, that was a big part of my, last 10 years in building a business. But also love helping business owners on the sell side. Just, they've worked so hard over the last 15, 20, 25 years. And being able to really help them kind of monetize that value that they've built in the business that is still, I don't want to say trapped, but it's quite illiquid. Brings me a lot of satisfaction to help a business owner strategize through that and help them execute. I've banged the drum a lot over my career, just saying how important it is on the execution of a sale, and how much value can be created from that point of saying, okay, I'm ready to sell my business. My business is ready, to the point where you actually get cash in the bank. Really executing that effectively, can create millions and millions of dollars in value. And, I'm not over exaggerating when I say that. Just, being able to negotiate a turn of EBITDA more on the sale, again, for a lot of businesses is, at a minimum $500,000 to, over $10 million, depending on the size of the business. So that's really satisfying for me to help business owners kind of execute on that really, really important, if not the most important transaction of their lives.
Yeah. And How do you see what's the difference when it comes to managing the expectations of sell side, where a lot of these business owners that built these businesses from the ground up, they're going to have emotional attachment to some of these businesses because it's their blood, sweat, and tears, right? So, and look, at the end of the day, someone could want one price, but the market pretty much dictates the value, right? If the buyer comes in, whatever they're willing to pay. If there's tons of buyers, then of course there's movement. But how do you manage the expectations on sell side when it comes to the actual valuation?
Yeah, I'm pretty straightforward. I'm pretty, I don't want to say blunt, but I think I'm pretty, let's just say straightforward when I talk to these business owners. So, I say, hey, like, this is what I can do in the marketplace. Like, I feel that this would be a fair valuation. If we were to go to market, I had this conversation actually last week with a client. I told her, hey, this is the baseline. If this was my business and I was to go to market, this is what would be my expectation for what I would want to sell the business for, and what as an advisor I think I can achieve. How do you feel about that? So I put it back on her and I asked her how she felt about that. And if we found a valuation at this level, would you pull the trigger? And I have to be that blunt because the selling a business is anywhere from, at earliest, I would say 6 months on a really, really, really fast transaction where you have a buyer in place that has all of their ducks in a row, to 12 months more likely. So it's a year of their time and it's also a year of my time. So for me to commit to a client that has kind of unrealistic expectations, it's not fair for them and it's not fair for me. So I really just try to be very open and honest in terms of, this is what I can get you in the marketplace. Of course, the market is going to dictate maybe more or less, but I'm willing to take the risk along with you at this valuation level. And if you're comfortable with that, and you believe and trust in my abilities to try to get you more, then let's do it. And if not, then that's okay. Here are, the 5 things that I think you could do to try to get you to a valuation that you might make you feel a little bit more comfortable or a little bit more excited about going to market with. So that's kind of how I manage expectations, is just by being, truthful, open, honest, transparent in terms of what I could deliver. And if that is not matching, then probably doesn't make sense for us to kind of work together at that time. Maybe there's a time in the future where the expectations line up, and we can work together. But at that time, if that expectation level is not there, then it's okay. We'll shake hands and we'll move on.
Yeah, and I think that's very important to be, upfront and honest. There's a lot of businesses that are out there for sale that probably aren't priced to actually sell. They're more like out there to, maybe there's some tire kickers out there, maybe test the market, So I think that's important to be upfront and honest. Like we said, some of these business owners have serious emotional attachment. Is something that they've built, they're proud of. And, I think that's important on the up front for them to know exactly what they're looking at. Um, are you still
Yeah, and
pers-
and sorry, just maybe adding to that. Sometimes the business owner needs to go through that experience, right? Needs to take it to market and see what offers they get, to
Mm,
really kind of, for them to um, for it to sink in a bit, to say, okay, yeah, the market has come back. I've gotten 3 offers. They're all within, 10% kind of variance, high or low. So the business is worth X, right?
mm,
Um, but unfortunately, I can't make that commitment for a year to just go test the market.
yeah.
I need to have a pretty good kind of, it's a partnership. I need to have a partnership with the owner that we're on the same page in terms of what valuation is.
Yeah. And are you still personally acquiring business yourself now, or are you solely focused on just the advice?
I'll be opportunistic. I always come across different people that, if they're acquiring businesses and I see a really good kind of synergies with them, I'll look at acquiring a business. But right now, focused on my advisory firm, and focused on helping others, again, either grow their business through the acquisition side or monetize the business on the sell side.
Yeah. And when it comes to creativity and deal making, Over your experience over the past 20 years or so, what's the most creative thing that you've seen done in a deal, either from a legal or financial perspective?
I mean, that's a good question. I think I'm not smart enough to be to do a lot of creativity in a deal. Like what I like is finding something that works,
Mm,
and replicating it, right? Like it
mm,
just makes it easier. And I know one thing that we did with when we were doing acquisitions is we replicated the LOI, we
yeah.
replicated the deal structure, we replicated kind of our purchase agreements. And not to say that there wasn't some variance between the different deals. There were a little bit of kind of things that came up that we had to change deal structure a bit, but I think it just made it a lot more efficient, right? It made
Mm,
it it made it and it's improved the efficiency of the transaction, improved the speed of the transaction, improved our communication of how we went to buyers and we said, hey, like we did these last three deals and we structure them this way. There's a market for what we're doing here. It really kind of solidified the type of people that we wanted to acquire, because people that liked our deal structure were kind of a certain breed, and kind of at a certain stage of their kind of business lives. So, I actually, not that I can't get creative, I guess, but I think keeping it simple is a lot of times pretty effective in kind of, especially in the lower middle market. Um, I work with buyers where they want to get really creative and they're like, well, why don't we do this earnout that's based on like, you know, uh, net profitability, over the next 10 years. And I'm like, would you do that if you were on the other side? Would you sell your business with this type of earnout? And once they reflect on that, the answer is usually, okay, no, it's probably too complicated.
mm.
So, I'm always like, keep it simple, stupid. That's the way I like to look at life, I think.
Okay. And when it comes to actually valuing the business, right, from buy side, it's very subjective, right? People value businesses or any asset, they can all value it differently. What do you personally look at when it comes to valuing the business?
Cash flow, right?
Mm,
Like, the ability for a business to cash flow, and risk, right? So
mm,
um, what's the risk around earning that cash flow? And I think that this is where kind of the discrepancy comes between buyer and seller a lot of times, is that a seller will look at the cash flow, and the cash flow is pretty, I don't want to say it's easy to determine, but it's more factual, right? You look at the
mm,
financial statements, you could do kind of your calculation and say, okay, the cash flow has been X for the last number of years. It might be X for the next, X number of years into the future. So the cash flow is more factual.
mm,
The risk around earning that cash flow is a little bit different, right? So the buyer looks at it from a very skeptical lens. They're coming in and saying, there's all of these things that can go wrong, right? I can lose your top customer. You have key employees that are, critical to the execution of this business. What if they left? Where the seller is looking at it and, because he's in it day to day, he
mm,
doesn't kind of see the risk as being as great as a buyer would be from the outside. So I think that's where the discrepancy comes in terms of valuation, is not necessarily the cash flow level, but the risk to be applied against that cash flow. So I mean, those are the two big things, obviously, that drive values: cash flow and risk, achieving that cash flow. And then the other thing is that I think is sometimes missed is when you're buying a business, say you're buying it for $20 million.
mm,
Um, what do you get for that $20 million in terms of a balance sheet? What does the balance sheet look like on closing? There's working capital, there's capital assets, but then there's also the intangible and the goodwill.
mm.
So what makes up that intangible? What makes up that goodwill? And from a buyer's perspective, really understanding that, and again, going back to the risk around that being transferred, I think those three areas are super important: cash flow, risk, and again, the delivered balance sheet, I call it.
Yeah, definitely. And when it comes to actually preparing for exit, right? So if you're scaling through acquisition, you're preparing for exit. What do you think are some of the things that business owners should start to do, 12 months, 24 months out from looking for an exit?
So, there's all the operational stuff, right? Really just having an awesome business that cash flows. So anything you could do to increase your cash flow and reduce your risk.
Mm.
So things like if you have customer concentration, try to somehow mitigate that customer concentration risk. If you have key employees, how do you either diversify the roles and responsibilities of key employees so you have more people within the business that know how to run the business. So all those things from just an operational perspective to reduce risk and increase cash flow, those are important. But from a pure just kind of positioning and marketing perspective of executing on the sale of the business, I think there's a few things that you could do. I think really understanding your objectives. What do you want to achieve when you're selling the business? Like, do you want a full exit? Do you want a partial exit? Are you looking for maybe a private equity partner to come in and help you grow the business? Is legacy important? If it is, maybe a management buyout makes sense. So really understanding what your objectives are, understanding what you're going to do after the sale, and then forming and taking those objectives and creating a transaction structure that helps you achieve what you're trying to achieve, right? So if you want a full exit, the most likely buyer might be a strategic buyer. If you're looking to grow the business, then obviously looking at private equity firms to bring in capital, and thinking about what expertise that those private equity firms can add to your business to help you achieve that growth. So I think those are super important things. Really, understanding objectives and then tailoring the transaction to meet those objectives in terms of the form of the buyer that's coming to the table.
Yeah. And look, we're going through a bit of a shaky time, right? The macro sort of landscape looks fairly shaky. So what do you personally forecast for the M&A space over the next, I don't know, 12, 24 months?
Yeah, I think there's going to be a little bit of a pullback. I don't know what was happening in the UK and overseas as much as I do in North America, but I know North America has been kind of record-breaking M&A volume and transactions over the last couple of years. Surprisingly, over the pandemic, I would have guessed differently when on March of 2020, I guess, when the pandemic kind of became more prevalent. But that said, there's lots of capital out there. Interest rates were still really low. There's been a different dynamic where acquisitions switched to people trying to get access to supply and resources, and also people. There's been a real people kind of constraint. So acquisitions, people are looking to acquire to fill some of that access to supply and then access to people. I do think rising interest rates have kind of a dampening effect. And then just global uncertainty. I think there's lots of kind of global uncertainty out there. So I think there's nowhere else to go than a little bit of a slowdown on the M&A front. But there are like just countering arguments to that. There's this demographic of baby boomers that are coming to this point in time where they need to transition. So I think there's still going to be lots of opportunities for people that want to buy. I think the buyers just need to be a little bit more creative in terms of where do they access capital, and then also with increasing interest rates, like the default for that is decreasing valuations. So I think even though volumes there still might be a need for a lot of transactions, the valuations might come down.
Yeah, I think you made a good point there because with the baby boomers, looking for exits, I suppose, it wasn't long ago, March 2020, where a lot of these business owners was probably they're coming to their retirement age, and they've gone through this very stressful, uncertain time where, yes, a lot of businesses had some of the best financial years of their life in 2021 with crazy demand. Who would have thought, right? But, where they went through that initial stressful, uncertain time, and now we're coming to another stressful, uncertain time within 24 months, I suppose some of these are probably looking just hang the gloves up and, then there's still going to be buyers in the market that still want to capitalize on opportunity, right? So even with rising interest rates and an uncertain, macro sort of economic landscape, there's still going to be tons of opportunity in the market.
Yeah, I think the pandemic has done a couple of things, at least to the business owners I've talked to. it's made them reflect on health, and spending time with family, and maybe more leisure activities like travel. When you can't travel and spend lots of time with family, you kind of reflect on that as being maybe a little bit more important. And everybody is, from that 2020 period is, 2 years older now, right? And you're right. I think the more that these things pile on, the more that some of these that demographic of the baby boomer population is thinking to themselves, well, now's just the time. Like, I've definitely tried to maximize the value, and definitely tried to find kind of the best buyer to kind of monetize this wealth. But now's the time to do it. And just kind of move and transition to that next phase of life. So I do agree with you, D.
And where do you see the biggest opportunity? Which sector do you think poses the biggest opportunity? I understand a lot of people talk about the sort of ESG sector, but outside of the ESG sector, where do you see the biggest opportunity in the M&A space?
I think there's lots of opportunities, on the tech side. I think there's still lots of room to grow on different technologies that enable more communication, enable more just kind of augmented discussions, and there's augmented reality and there's virtual reality and all of that. So definitely space there. I'm not an expert in that space, so I can't really comment on the opportunities, but I do think the healthcare sector, right? Like, I think, again, talking about this aging population, there's going to be more need for, private care. There's going to be more need for, in any sort of like medical assistance that goes around kind of aging, and, making sure quality of life is improved as we age, and health is improved as we age. So I think the healthcare sector is one. Um, I mean, it's hard to predict. I just think that there's going to be opportunity in a lot of different areas. Just as long as I think and I'm kind of feeling this, that there's a little bit of a an increase in the awareness on the ability for people to go out and actually grow businesses through acquisition
Mm.
versus just doing it in an organic fashion. So I think the more knowledge that's out there, I think people are just going to take advantage of it, regardless of kind of any sort of specific niche. I think it's more about the execution of the strategy,
Mm.
and the knowledge on how to do it. That I think that's the real opportunity that I'm pushing, is that, hey, like, where you've grown your business 10% a year for the last 5 years, there's ability to grow it by 100% a year, by just going out and acquiring businesses. So I think people are starting to recognize, and learn more about that opportunity. And now the real the real thing with anything is execution, is being able to take this knowledge, and going out and do it.
Yeah, and I definitely think that social media has also helped with that, right? A lot of people beforehand maybe not have been exposed to the fact that you can scale a lot quicker through acquisition. Like you said, execution's key. But when you start looking at some of the biggest companies in the world, right? Amazon and Apple have more capital than almost anyone, right? And they still acquire businesses. They have all the money and all the infrastructure to build, but from scratch. But there's a reason why they scale through acquisition also. So I do feel that social media and the access to information has now allow people to access that knowledge to be able to scale through acquisition. What's your thoughts?
Yeah, you mentioned Apple and Amazon. I think people have maybe thought that acquisitions is a big public company game,
Mm.
where I don't think it is, right? I think a lot of businesses can grow, private businesses can grow through acquisition, by buying $2 million businesses, $5 million businesses, right? And tacking those on. But it's important to do it right. Again, we talked about just kind of like this changing demographic where there's knowledge out there of this acquisition. I think it's permeating into the conversation between this, like, acquisition entrepreneurs, where maybe it's an individual that, rather than working a 9 to 5 job, they're going out and buying a business instead.
Mm.
But I think the conversation can even grow into being a serial acquirer strategic serial acquirer, right? I think a lot of businesses still haven't taken advantage of their kind of positioning in different marketplaces to go out and buy a competitor, or to go out and expand into a different vertical, or go in and move into a different geography. So I think that conversation needs to be advanced. I think there's a lot more businesses out there, established businesses, like, not the billion-dollar companies, but the $50 million company or the $100 million company that are comfortable where they're at and comfortable with their organic growth, but they could do so much more by accelerating their growth through acquisitions.
Oh yeah, I totally agree. And
Yeah.
like you said, this it isn't just for the biggest players in the game, right? This is at the lowest level. Even someone that may have, your typical 9 to 5 that's looking, who doesn't mind going to being an owner operator, but they get access to more cash flow, more flexibility. Of course, all the stress that comes with owning a business too. But
Yeah.
but yeah, I think that there's definitely a lot of opportunity out there, and it's definitely going to be interesting, 18 to 24 months ahead, definitely. But look, John, I really appreciate your time today. It's cool that we managed to get this done finally, and yeah, look forward to catching up with you at some point in the future.
Yeah. Thank you, Dee. I really appreciate talking to you. I love what you're doing out there, and look forward to doing it again.